Hello, welcome to the European Open Briefing for Friday, June 22nd. I'm Rafi Boyajan, currency analyst at xm.com, and we're going to be taking a look at what's happening in the currency markets today. The US dollar has eased from yesterday's 11-month highs as treasury yields have fallen back a little bit. This comes on the back of renewed concerns about a possible trade war. We're seeing some signs that business sentiment in Europe and in the United States, as well as perhaps in China too, being negatively affected by the growing uncertainty surrounding higher tariffs. In European currencies, the pound jumped high yesterday after a surprise hawkish descent at the Bank of England. The euro is also sharply higher this morning ahead of the euro area PMIs. We already had the German and French PMIs that boosted the euro a little bit further this morning. The Canadian dollar, though, is struggling at one-year lows ahead of Canadian inflation and retail sales numbers due later in the North American session. Oil prices are sharply higher, though up around 1%. We can see here light crude ahead of that OPEC decision regarding whether or not they will increase output. If you look at a quick look at stocks, we can see a positive start in Europe. It was a mixed bag in Asia. We did see stocks being most global indices closing sharply low yesterday, particularly in Europe and in the US, as risk aversion intensified towards the end of the trading day. And if you look at today's main movers, we can see oil prices up 1%, euro yen also gaining sharply, followed by euro dollar. We're also seeing a distant rebound in the Aussie and the Kiwi as well, although we haven't had any significant data, and we can see the dollar index being negative. If we now move on to the US dollar, we can see dollar index has retreated from those 11-month highs yesterday as treasury yields have pulled lower. We had the Philly Fed manufacturing index dropping to a 1.5-year low in June. That was released yesterday. So that increased concerns that uncertainty surrounding the higher tariffs, but the ongoing trade tensions between the US and China, as well as to a lesser extent with the European Union and some other nations as well, could now be hurting business sentiment. Wall Street, as mentioned, already closed sharply low yesterday. We also had some profit warnings, particularly German car manufacturers saying that they might see profits being hurt by China imposing tariffs on US imports. Let's now move on to the euro and the pound, because we saw quite a big reversal yesterday. Both are now trading around 1-week highs. The euro has comfortably recovered back about the 1.16 level after rebounding on the 11-month low of $1.1507 yesterday. It is being helped by the weaker dollar, as well as this morning by positive PMI releases out of the Eurozone. The pound there, though, we can see surging high yesterday after the Bank of England policy meeting. The Bank of England, as expected, kept interest rates unchanged at 0.5 percentage points, but we did see a surprise descent in the MPC vote, with 3 committee members voting for a rate hike, with the bank's chief economist joining the other 2 hawks. We saw sterling sharply rebounding from that fresh 7-month low 1.3099 to around 1.3290 at the moment. That's a jump of around 1.5%. And now let's look at oil prices. We can see oil prices seesawing over the past few days. That's mainly on the back of varying rumors about what OPEC and some non-OPEC countries will decide to do at the meeting, which started today and will likely go on till tomorrow. So it's being reported that the major producers are pushing for an increase in output of 1 million barrels per day, but Iran is resisting. So at the moment, prices are around 1% higher, but if we do see a smaller increase, we could see prices dropping sharply. Early in the week on Monday, both WTI and Brent crude had hit multi-week lows on speculation that we could get a big increase in output. And let's now have a look at today's economic calendar. We can see Japanese inflation staying unchanged at 0.7% in May. Although we did have a positive manufacturing PMIs out of Japan, we also had positive PMIs out of France and Germany. We're seeing stronger readings for in the June flash reading. We're going to have the euro area PMIs out shortly, but the main focus later on will be on Canadian inflation and retail sales numbers. That's it from me. Thank you very much for watching and have a great day.